Good morning, everyone. This is Brad Matheny. Today is the 18th of October. It is Friday. Happy Friday, everyone. We made it through the week. We're looking at a temporary bottom on the SPY cycle patterns today. Let's go over here, take a look at the movement of the markets overnight. We had a pretty interesting move yesterday. I mean, after a big gap up opening up in the 585, almost 586 area, we saw a moderate pullback all day long. Quite a bit of news yesterday coming out about, Israel's activities. And, we're melting upward. We really are. We've had a couple of pullback days. And you can see here that I indicated that I thought that we would be moving into kind of a moderate gap down phase yesterday. Expected it to get up above 588. I kind of still do expect the markets to try to rally up into this mode. Now, remember, we're going to be moving, whatever happens today, we should be moving into kind of a sell here mode. So, markets right now, we're up a little bit, 583.42. There's always a little bit of news on Fridays. We'll see what happens. Markets are generally a little bit higher right now. I think we're going to see that kind of melt up trend continue. Given yesterday's kind of sideways slide, looks like my expectations of a big rally up into the 600 area might fall a little short over the next couple of days. But, in reality, guys, I kind of expect the markets to do something maybe a bit like this, maybe up into the 590, 591 area. So let me draw that again. Maybe something like that, 590, 591. Kind of like that today. That would be an upward, hypothetically, about 1.5%, maybe 1.25, 1.5% upside today. That would put us right around 591 and a half, 591 even. And I think that's a fairly solid trend. Now, next week, we move into Monday. I'm expecting a little bit of a gap lower opening on Monday and then a bigger rally. So that's going to move us again. If we do get a little gap and we do get a little rally, that may put us in the 596 area. So we'll see how it plays out. Overall, though, it's been a pretty good week. I mean, we had the buy here, sell here, buy here, sell here, the roadmap routine playing out. It's not been outstanding, I would say, but overall, I think it's played out pretty well. Now, what's done even better is this. Gold has played out very, very well with my patterns, and you can see here we're in this rally phase. We had kind of a buy here mode, into this buy here, into sell here, into buy into this area off of this low in the morning, which was anywhere over in this area. We had a sell go flat on this day, which was up in this area. Good solid move from 2660 up to 2680, 20 bucks. That's if I do the math right, I think that's $2,000 a contract. We moved into the flagging formation and then the sideways consolidation on an excess phase peak pattern. We had the expectation of sideways trading through this area here was perfect, right in line with the excess phase peak pattern. And then look at this. We had that buy trigger right here, indicating that we were going to be moving out of a trend. I highlighted to everyone it could be like midday. Yesterday, we could be moving out of this trend, and we really started to shoot up. We're at 27.27 right now. So, that buy zone could have gotten you for about a $30 move to the upside, and we're still going up. So at this point with gold, we'll see how it closes, but gold today could have another, you know, another move up into the 2740 area, that would be an outstanding little move for gold. And again, we're moving into a rally that's going to carry into Monday, maybe getting even higher, 2750, 2760. And then we get into a consolidation and then a rally phase here on Wednesday, the 23rd. And we're looking for a rally to carry up into about maybe 2780, 2790. So I'm getting a lot of comments from people trading gold and just saying how they're loving my work, even other people trading the SPY. So we'll go back to the SPY here real quick. And what we're looking at here is a carry on of this rallying phase. Now you can see the consolidation. So remember, you got to understand where we're at here. This is a pretty solid consolidation phase. Where was our flagging? Okay, it's pretty simple here. You can see we've peaked, we've moved into this flagging, we extended up. But at the same point in time, we can roll down, come into this area, flag a little bit here, and if you follow this, we break out. Oop, we break out of flagging. We rally up. We're looking for our first big real consolidation period. And it doesn't really start to happen until right here. So here's our consolidation period. We've rallied up into this mode. We're moving through consolidation here. And then we're starting to get into our rally phase, seeking a new ultimate high. So understand, folks, that we're really moving into that rally phase again. And we need to, if you pay attention to this setup right over here, in fact, I'll do it on a separate chart. See what I have on this SPY chart. Okay, get rid of these. Come back down here to 30-minute or hourly. What'd I do? 30-second. Yeah, that's not gonna work. Okay, so here we go. And what we have here, folks, is we have a rally up, coming back down, flagging. You can see all this, right? You should by now start to be looking for these types of formations with regards to the excess phase peak pattern. It looks like we've broken through to the downside, right? Okay, yep, that's probably the case. The markets right now are, as of Friday or yesterday, had been moving in a downward trend. We're slightly higher today. We'll see how the markets open up, but understand that this excess phase peak with flagging, okay, is also, and I'm going to change these again to blue so you can see them as a different type. Remember, blues, let's say, are going up and reds would be going down, right? So we take a look here. We've already discussed this pattern that we had from the deeper lows way back here, setting up this deep low, coming down like this, looking for flagging, breaking up into this sideways congestion. And again, I'll make these red. Oop, red and red, so you can see the excess phase peak pattern playing out. This is a phase 3, this is a phase 4, breaking out. This new breakout phase should be attempting to rally up to some new ultimate high. Don't know exactly where that is. My guess would be in this 603 to 610 area. That's what my Fibonacci projection level is setting up. But notice what we've got here is as we come up, we get a very mild selling trend into a pullback into flagging. Okay, so could we call this a major excess phase peak pattern? No, it's more of an intra an intra bar excess phase peak pattern. But the breakout of the upside on the blue would be a trend continuation to the upside. The failure of flagging at this point, moving up into consolidation and then moving up into potentially an ultimate high, would align with a breakout up into some upward trending of the blue. So we're getting very good, potential alignment of triggers here. Remember, we're in this bigger pattern. It's playing out as a very solid kind of a flagging formation here, breaking out. It really is playing out very well for this upward move. And again, we're moving into this area. And you could theoretically come in here and look for these lows. Like here's the lowest low. So you could come in here, hit this level. Here's your pullback. Here's your flagging. Here's your breakaway up to consolidation. And now we should get this move up to an ultimate high. So you can again use these patterns, these excess phase peak patterns. Remember, they're critical. They really are, and they're everywhere. You just have to be aware of, like I said, I like to start with the bigger, broader patterns to give me some real direction, then start looking for the littler ones. And remember, I can go all the way down to like a 30-second chart and do these, but I don't find that useful for my style of trading, nor do I think you should try to do it because it's more complicated. But what we're looking for right here, if you look at all of this and you look at where we're at, this pattern here is, I'll do this in purple. This pattern here is really, let me find, yep, that's it, is really into this consolidation flagging stage. And this consolidation flagging stage usually will lead to a bigger breakout to the upside. And again, this just exited the consolidation phase, this red one, and should break to the upside. And this little blue and red trigger right here, the excess phase peak pattern, looks like it's in a sideways mode, which we did identify here as consolidation, and with the purple pattern. And now we're looking for some sort of a move, which looks very likely at this point to be an upward trend breaking to new highs right here. So we'll see how it plays out, but it falls right in line with my analysis here. Breaking to new highs, it would be a good thing. Rallying up here to the 600, 604, 605 area would be a very good thing. That puts us up into this area. Kind of highlight this, move this down a little bit, puts us right kind of into that area as an upper target. And I can certainly see that happening over the next week or so. So be aware that we've got these big breakaway moves that could be, a good, just do the math real quick, a good 3.5% higher. Okay, I don't want to waste too much time. QQQs should follow upward. 494.07 starting the day right up in this area. Yeah, I got a lot of lines. Let me get rid of some of these lines. I know you guys, everybody, I don't say you hate them, but, I'm going through some pretty advanced stuff with you guys. So, and like I said, my brain does a lot of this internally all on its own. I've been doing this long enough that I kind of just see these things in the chart. But with you guys, I'm trying to basically explain it, pick it apart. So in a way, I'm dissecting the charts for you and saying, look at what's really going on. And I know that a lot of you are getting it, which is fantastic. So we have to look at these structures, okay? So here we have the deeper low coming up. Do you see any flagging? Do you see any consolidation? Well, yeah, I mean, we do have this broader flagging pattern coming across here. So you can see this, and you can probably catch it right across these lows. And as I showed you yesterday, flagging ends up creating what's called an apex. The apex is typically in this area. It's like right near the point of a flagging pattern. And the way I usually count apex patterns is I look at the general flagpole, the rally into the initial flag. That's this mode here. Peaking, coming down to here, A. So you would count it as A, B, sorry, C, D, and then rolling out of it with volatility, and then the E move should be up. So understand that we're looking at a fairly strong upside move pending in the QQQs that aligns very well with my analysis right now. You can see that my analysis as of today, tomorrow, Monday, and Tuesday is rally, rally, rally. So we are looking at, the buy here, trying to get out at the end of the day today, looking to re-enter off whatever price opens on Monday and carrying into looks like Monday, Tuesday, Wednesday, trying to get out about Wednesday. Now, you could hold the position over the weekend if you want. Small position, we're getting close to the election, could be some weird news. So, it's up to you guys if you want to hold over the weekend. I typically don't like to hold anything over the weekend, except, my longer term position stocks. Like right now, I've got some metals and miners, and I'm loving that little rally that's taking place. So, okay, so we're looking at pretty much a rally in the QQQs over the next couple of days, and really, I'm thinking this 504 to 508 area is a pretty solid target area for a rally to the upside. From where we're at right now, we're not anywhere near where I had drawn my lines. That's what I call a shift in price. You can see we did it here, and look at how cleanly we shifted. So, take it from the middle area to the low. We shifted down there about 2. Try to make it a bright color so you can see it, maybe an orange. And so now you can see here, if we take a look at this, normally what happens is we'll shift about 2. So you come here from the midpoint and paste it again. And we shifted about 2. So here's about a 1.618, let's call it, shift from the midpoint here. What I did is the midpoint from my bars here should actually be a little higher, but we're getting about a 1.5 standard deviation shift on prices right now. Does that mean that price will relate or recover back up into this area? Maybe. Does that mean that price would recover into this trending? Let me show you the trending so you can see it. So we'll use this, and we'll come down here off these lows. Does that mean price will recover off of up to this area, this purple area? Maybe. What you have in doing this type of analysis is more like a GAN style of analysis. And what we would be looking for is channeling, in this area here, channeling across these highs, and saying that, look, price could rally up into these channels. Remember, here to here, and try to reach a peak back up into these channeling areas. That's not uncommon, but we got to get through this area here, which is going to be, remember, this apexing is near the end of the day today. Could be quite a bit of volatility, could happen fairly early. We could get a breakaway, really strong breakaway rally. So if we do get a really strong breakaway rally today, I think you're going to be surprised to see prices move up above this 497.61 high and maybe try to get up into this 499 area if we get a good solid rally. Now, again, look, everything's pretty solid right now, so we'll see how it holds up. And my analysis is that we should be getting again, come back over here. We should be getting a temporary bottom. Temporary bottoms are, just so you know, we open, we build a little support, however that looks, and we rally. So that support can be a U-shaped bottom, can be a deep V type bottom, but it's typically some sort of support and then a very strong rally. Okay. And lastly, before I run out of time, we are going to come over here to silver and Bitcoin. Oops. Yeah, that's not going to work. Nice rally right up into the 32.40 area. Really higher close. So again, pay attention here that, we're getting higher closes, which is very nice to see. You can see these higher closes here, higher close here. To me, I love that. Now we are still in this consolidation. And you can see, I mean, it's very clear to me. And again, I'll get rid of some of these lines because I don't want to confuse you. Try not to confuse you. But I can see the consolidation. I mean, I'll just get rid of this, 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 this. Oh boy, House of Blinds, Brad. This, 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 that, that, and that. Okay, so pretty clean chart, right? You see the flagging, you see the deep low. Look, guys, excess phase peak pattern. Deep low, pullback, flagging clearly into a decent sized downward flag. Guess what? This is an inverted excess phase peak. Now we have the breakaway, come back up over here into consolidation. There's our deep roll on consolidation. We're rallying back out of it. Once we break this 2340 area, we should be off to the races. And I think we're going to be looking at something much higher than probably up into this $34 area. So really, when you come into this area, you what you want to do is kind of like use Fibonacci extensions and realize that you got the original move here coming back down to this lower level, and then I would start looking around at 1.5 and 2.0 levels, the most common levels. Go away. And a 1.5 level puts us at 32 33.20, and then a 2.0 level puts us at 33.95. And there you go. There are your target ranges. And the $34 is the 200% measured move extension. Okay, I don't want to run out of time here, so off to Bitcoin. So what are we doing in Bitcoin? We are still consolidating. Okay. Now remember, price must always move, like I showed you, in an attempt to set new highs and new lows. We have this flagging. This flagging plays a pretty important role in the sense that here's our downward excess phase peak. Here's our flagging. Here's our rally up to the consolidation, which is right here. And we are still in consolidation. We have not broken out of consolidation yet. We're getting darn close to breaking out of consolidation. And it looks like we've had a close above, but rejected, and then another close above and rejected. Look at this. Look at how tight this is right here. Close above and then rejected. Close above and then rejected. we're in a very tight phase here. And I'll kind of give you an idea that if Bitcoin gets up above, call it 69,900, sorry, 68,900. So if Bitcoin gets above 68,900, I would say you got a really good chance at a good solid breakaway rally to an ultimate high. And if it fails to do that, then we're looking at, again, Bitcoin moving downward off of this rejection area right across here. We're looking at Bitcoin moving downward off of this level, breaking these lows, and really trying to move back down into this area. So again, I highlighted this 68,900 area. I would probably highlight this 66,000 area, indicating that that would be my area of a major breakdown in Bitcoin. So if we got above this 68,900 area, I would say you're off to the races. And if we get below this 66, I would say we're going to be in a breakdown mode. We are very tight. We are flagging. You can account to this here with a flagging formation across these areas here. Carry this out, blue, and carry this out. Really, it comes right across here. And because of that, if we look at the flagging formation, we have an A, B, C, D, E. We are trying desperately to break above this level. We are trying desperately to get higher right now. The volatility apex is probably going to be a range of about like this. It's probably going to be pretty big. But again, really getting down below this level, 67,000. So this is 67,000, would be very concerning for me right now. Okay. I personally think that Bitcoin's going to try to move a little higher. I'd give it about a 65% chance you're going to get some sort of a attempted breakaway move to the upside. But would be very cautious of the 67,000 level area. A move below this area showing rejection and breaking downward at this point below this flagging apex would mean that we could move into very deep flag volatility, and flag volatility could be very big. Okay, so you could get a good pullback before we get any kind of a breakaway rally. And a good pullback here could send us into a downtrend. So, I'm leading to, I hate to be this waffly with it, but right now, this rejection shows you've got, slightly um, greater chance that you're going to have a volatility move to the downside versus a breakaway move to the upside. Slightly. So I would say, maybe 55% to the downside, 45% to the upside. If we had rallied up above this level, got up above this strong close, I'd say you're almost 100% up to the upside, or at least new highs, because that's what price does. Price always attempts to seek new higher highs or lower lows. If it cannot reach a higher high, it must attempt to reach a lower low. That's how it works. Okay, 29 minutes. Sorry. Let's go get some this morning, guys.